In simple terms, an escrow account is just a holding account for your monthly mortgage payment. Ever wonder where that extra chunk of your mortgage payment goes? It's going to the escrow account. Now, what is an escrow account? Why do you need it? What are the pros of having it? What are the cons of having it? Do you even need it? These are common questions that not a lot of homeowners with a mortgage know. Understanding escrow accounts helps homeowners budget, it helps them avoid surprises, and it helps them make a decision on if they want to waive their escrows or if they want to continue paying into them. In simple terms, an escrow account is just a holding account for your monthly mortgage payment. A portion of your monthly mortgage payment is going into this escrow account and it's being held for property taxes and homeowners insurance. When you purchase the home, the lender set up this escrow account and now there's a servicing company that is servicing your mortgage payment. And so we need to look at the four buckets that the payment goes into. It goes into PITI, principal, interest, taxes, and insurance. So when you make a payment, a portion of it goes to the principal. This is the portion of the loan that's actually being paid back. And you'd be surprised, I have people look, especially at the very first part of their mortgage payment, they might be making a $3,000 payment, and a very small portion of that is going to the principal, maybe like $300, and $1,700 of it is going to interest. Okay, so that's the second part. The interest is the fee that you're paying to the lender for them actually loaning you the money. The T is taxes, property taxes. Whatever county that you live in, the tax bill is due. Now, some states like Texas, where I live, it's an annual tax bill. At the end of the year, we pay our taxes. It's paid one time a year. But there's other states where it's paid semi-annually. And so the escrow account knows this and it pays the taxes on your behalf when those tax bills are due, and is similar with insurance. The last part of it, the I, is insurance. Now, some people call this homeowners insurance, some call it hazard insurance. It's the same thing. It is insurance that's insuring not only you, the homeowner, against liability, but also the actual property itself. If there was a fire or a hailstorm or tornado or something happened to the house, insurance covers that. And so that bill is usually paid annually as well. And so you're paying into this escrow account as every single month. And when that tax bill or when that homeowner's insurance bill comes due, it's paid out of the escrow account. So they don't have to go to you and say, hey, give me more money when you weren't expecting it. So why do you even need an escrow account? Well, for one, it protects the lender from foreclosure if there's an unpaid tax bill or unpaid homeowner's insurance bill. It ensures that these are going to be paid because every single month you're paying into it. And then two, it also helps out the homeowners. It helps them with their budget. Here in Texas where I live, it's not uncommon to have pretty high property tax and homeowners insurance bills. Depending on the value of the house, you could have $5,000, $10,000, $15,000 a year property tax bills.
Yeah.
So that's a pretty big chunk of change to pay all at once. So the escrow account helps divvy it up monthly and make it a little bit more budget friendly. Same on the homeowner's insurance. If you're a homeowner in the last 2-3 years or so, you've probably seen your homeowner's insurance premium increase, especially here in Texas where I live. I know Florida has seen it a lot, California's seen it. It's not uncommon to have homeowners insurance premiums be $2,000 a year, $3,000 a year, as opposed to some of the other states like Georgia or Oklahoma that have pretty reasonable homeowners insurance bills. So the escrow account just helps homeowners budget for this. The escrow account is funded at your closing and it's set up to be collected as part of your monthly payment. So if your homeowner's insurance premium is $2,400 a year, well then $200 every single month is going to be collected and put into that escrow account. Similarly for your property taxes, if they're $6,000 a year and is paid once time a year at the end of the year, well then $500 a month is going to be collected as part of that escrow account and paid out when that $6,000 bill is due. Now, a common point of confusion that I see on the final closing disclosure is homeowners say, hey, why are you collecting homeowners insurance twice? So on the prepaids, you have to prepay for the entire year of homeowners insurance up front. So that's collected at closing. Now, the initial escrow payment, as you can see here, there's 3 months being collected up front to help pad that escrow account. So let's think about this. Let's say you close on a property in August. You're going to skip September. There will be no payment due in September, so your first payment is not until October. That homeowner's insurance started in August, so that bill's already ticking. And so if you did not prepay into that escrow account, there's not going to be enough in there because you've only have paid 11 months into that escrow account by the time you start making your payments. So we collect 3 payments on top of it to give us 14 months. Most lenders want 14 months of escrows in there, so a 2-month buffer in case there's a property tax increase when that bill is due and they don't have to go to you and say, hey, give us more money, there's a shortage. Once a year, the servicer, they will do an escrow analysis and look at what the current tax bill is and what your current homeowner's insurance premium is to make sure there's enough money in there. And if there's too much, they can only have a 2-month buffer in that escrow account. So if they look at it and be like, wow, we have an extra 5 months of funds in here, they will refund it to you. They have to. But if there's the opposite of that, if there's a shortage, they're like, man, there is not enough money in here, then they're gonna have to come to you and say, hey, we need to increase your monthly payment or just pay a lump sum into the escrow account because we don't have enough in there. So it's very important that you work with a lender that is going to properly calculate those escrows, especially on new construction. I see this all the time on new construction where the taxes are currently only being taxed for the value of the land because the home hasn't been built yet and the property taxes haven't caught up to it. You need to project what those property tax bills are going to be once that home is valued by the county assessor, because if you're severely underpaying into that escrow account, you're going to have a rude awakening when that real property tax comes due.
You'll regret it.
But do you have to escrow? No. You can waive your escrows and only make a principal and interest payment. The 4 most common mortgage loan types. On a conventional loan, usually you need to put down 20% or more in order to waive your escrows. On an FHA loan, you cannot waive escrows. On a USDA loan, you cannot waive escrows. On a VA loan, my favorite loan, you can waive escrows. The VA doesn't dictate to lenders if they have to escrow or not. It is up to the individual lender themselves that dictates whether they want to escrow or not. I work with lenders that we do not require escrows on a VA loan. So why would you want to waive escrows? Well, for one, some people like the flexibility with their finances to put it somewhere else rather than making the payment into their mortgage. So if you think about it, especially my property owners in Texas or somewhere that have like the high property taxes, $10,000 a year, $15,000 a year, they'd rather set that aside in their savings account. You know, right now, high yield savings accounts are yielding like 5% or something. They'd rather earn interest in it. And at the end of the year when it's due, pay it out. Now you have to have the discipline to set those funds aside and not spend them when the bill comes due. So I hope you learned something about escrow accounts. They're extremely important in helping budget for when these bills are due, or if you're financially disciplined and you want to manage the funds yourself, you want the flexibility of having that cash with you and paying the bills when they're due, well then you learn something and you have that option as well. If you're thinking about refinancing, you need to watch this video right here. It'll help show you all the ins and outs of refinancing and hopefully avoid pitfalls. Thanks.